Hey folks, welcome to Black Flag India. Today we're joined by a very special guest, our first ever interview, Professor Surajit Mazumdar. He teaches at the Center for Economic Studies and Planning at JNU. Thank you so much for joining us, Professor.
Thank you for having me.
I want to start with the present state of the economy, and then we'll talk about how we got here. The Q1 GDP numbers just came out, negative 24% growth, and the forecast for the remaining 3 quarters is also negative. I want to ask you just what is your reading of the state of the Indian economy, especially considering the fact that the distress in the informal sector isn't really captured truly by these numbers?
Well, I think if one were to rationally analyze, no matter what perspective one starts with, just the sheer facts of what are there before us, it is clear that India is suffering from a double whammy.
Mm-hmm.
In the sense that every economy in the world, whether it has been successful or to what degree successful in containing the pandemic,
Mm-hmm.
has had to suffer economic consequences in terms of contraction of economic activity.
True.
So whether you're successful or you're less successful, economic contraction is a price that everyone has had to pay
True.
for the pandemic. But what we seem to see in India is a contraction of an order that is amongst the largest in the world,
Mm-hmm.
but without even the concomitant benefit of having contained the pandemic.
True.
So from a situation where we were amongst the least affected countries in the world in terms of the pandemic originally, we have now become the country where, which is probably the epicenter of the epidemic at the moment.
True.
So we have had this double effect
Mm-hmm.
where we have not managed to contain the pandemic and we have had a severe economic contraction. And because of the failure to contain the pandemic, the impact on the economy is likely to continue. So we'll have a longer duration of such a contractionary effect. And naturally, in the context of an economy like India, where 90% of employment is in the informal kind of employment, the implications for employment are going to be severe. Okay. Of course, when you unlock, desperate people will try and find some kind of work in order to just sustain themselves. So it's not going to necessarily show up always in terms of the explicitly unemployed figures. Okay,
Sure.
that may show a recovery, but it's the income that employment will generate, which will be really badly hit. And this in a background where, in any case, returns to laboring activity or to employment in general are very, very low in India. Okay, so it's on a low income base that you're going to get this hit. And of course, this is going to have a longer term impact beyond this particular period in terms of the consequences for the economy. Because it means that, in a sense, demand in the economy would be depressed even once normalcy is kind of restored because of the effects of this loss. But what is important to keep in mind is that the Indian economy was already well on its way towards such a problem or a crisis before anyone in the world had heard about the coronavirus.
Yeah.
Okay. So there was a problem that was developing in the past. Okay, and this effect has come on top of that. So therefore, the damage is all the more severe, not just because of mismanagement of what has happened during the pandemic, but because of what was the situation in the past. And therefore, the prospects of a recovery in the absence of adequate policy interventions are that much bleaker for India.
Okay. So you talked about the past, that the Indian economy was not really doing very well. The GDP growth had been decelerating since the beginning of 2018. The explanation that one very usually hears, apart from the people who did not even acknowledge that there was something wrong with the economy, the other explanation the group of people offer is that, well, the economy was doing really well, GDP was doing well, but then the dual shocks of demonetization and GST kind of hobbled the growth process. You wrote a paper in 2017 titled Indian Economy in the Second Decade of the 21st Century, Signs of a Crisis. So you were seeing signs of this crisis right starting from 2011, 2012, which is very different from what the picture that we get from this usual narrative that we hear. Can you tell us what were the signs of a crisis that you saw and what were the reasons behind them?
Well, in terms of the actual trends,
Hmm.
what we saw from the beginning of the second decade of the 20th century
Yeah.
is two clear trends are visible if you look at India's data. GDP growth figures for this decade are controversial because of the revision of the
Yeah.
GDP series in 2015.
Yeah.
Okay. And many people, including the former chief
Yeah.
economic advisor of the government which introduced that,
Yeah.
in whose tenure this change was introduced,
Yeah.
have argued that the actual growth rate was much lower.
Yeah.
But even if you leave aside the GDP growth rate figures, there were two clear indications
Hmm.
of a serious crisis of the Indian economy.
Hmm.
One was, even in the new GDP data,
Hmm.
one was that investment in the economy
Hmm.
was stagnating.
Okay.
Okay, that is investment to either build new infrastructure, build real estate, or to
Hmm.
create capacity,
New capacity. Yeah.
particularly in the industrial sector.
Hmm.
This had been stagnating for a decade.
Hmm.
Okay.
Yeah.
Which means what? In an economy where you are trying your best to increase the ease of doing business, doing Make in India, doing all kinds of other programs to induce private investment. If private investors were not investing, then that was an indication that there was a problem. Okay, that they did not feel that their investment would offer a
Return.
adequate
Yeah.
return. So in a sense, India's corporate sector, which was being encouraged, no matter what it said in words, with its money, it was making a statement about the state of the economy.
Hmm.
The second was with regard to India's trade.
Hmm.
Both exports and imports also were stagnating throughout the decade. Okay,
Hmm.
so which meant that you also didn't have export-led kind of impetuses for growth in the economy,
Hmm.
and imports stagnation also was reflecting the fact that important sectors of the economy were not being able to grow
Hmm.
because most of India's imports are not of final products we consume.
Yeah.
Most of India's imports feed into our intermediate inputs or capital goods which feed into further production.
Yeah.
So in particular, the industrial sectors
Hmm.
stagnation for the entire decade was responsible for this flat trend as far as imports are concerned.
Hmm.
And with regard to
Hmm.
the industrial sector, the GDP series was most controversial with regard to how it was measuring manufacturing growth.
Okay.
Now, there was another indicator available for manufacturing growth,
Hmm.
which was the index of industrial production, which
Yeah.
is a measure of the volume of industrial
Hmm.
production. Now, if that was also revised with 2011-12 as the base,
All right.
and it was revised after the GDP series was revised. Okay.
Hmm.
Now, if you look at that particular series and you look at the entire decade from 2011-12 till the present,
Yep.
you see a picture of industrial growth which has been seen only once in the past, which is when India experienced a decade of industrial stagnation from the mid 1960s.
Hmm.
So, this has been India's second decade of
All right.
industrial stagnation
Hmm.
since independence.
Hmm.
Okay. So, all of these were signs of and this was
Yeah.
one of the reasons why investment was not picking up
Hmm. Hmm.
because if production does not find a market,
Hmm. Yeah.
why will anyone invest in expanding capacity for that particular sector?
Hmm.
So these have been visible for a long period of time.
Hmm.
Okay. Unfortunately, those who are advocates of policy
Hmm.
in which the state doesn't either tax heavily
Hmm.
the corporate sector or the rich,
Hmm.
nor does it spend heavily,
Hmm.
they have tried to explain these in other terms.
Okay.
But I look at it as simply a clear indication of the fact that a growth process
Hmm.
that had been seen for the last 3 decades,
Hmm.
in which one segment of the economy
Hmm.
and one segment of the population prospered on the basis of the fact that you could produce and produce with high productivity with
Hmm.
labor that was available extremely cheaply.
Yeah.
But that cheap, the conditions which maintained that cheap labor meant that 90% of your population,
Hmm.
its ability to demand products was not keeping pace with that particular growth.
Hmm.
And that narrow, increasingly narrow social base of your growth,
Hmm.
okay, which on the one side benefited in the form of cheap labor,
Yeah.
on the other side created a problem that you did not have a adequate market.
Okay.
And despite this cheap labor,
Hmm.
Indian firms have not, in general, acquired the capability to be competitive internationally
Okay.
across a broad range of industries. And therefore, they couldn't even compensate for this by
Hmm.
export.
Hmm.
So that's the combination of circumstances which created this problem. So
Hmm.
it basically meant that that growth trajectory, which relied on cheap labor,
Hmm.
had actually run its course.
Yeah.
And it was no longer possible to sustain that. And a decade long story,
Hmm.
if for a decade this is happening,
Hmm.
then that is indicating this is not a temporary cyclical downturn,
Hmm.
but these are signs of a long term problem that
Hmm.
that particular growth trajectory had exhausted its possibilities.
Hmm. Hmm.
And but if you are not willing to
Hmm.
change course in such circumstances, and you're trying to somehow recreate that same process, something which has really been was encouraged by the fact that in the previous decade, that trajectory appeared to have produced its golden age.
Yeah, that's what I wanted to ask next. Yeah.
Yeah.
Yeah. So
So,
what
so
was that
coming in
low
the
wage?
background of that golden age, the desire to go back to it
Hmm.
rather than to recognize that that story is over and you have to now look ahead.
Hmm.
That desire to go back to it is what has dominated
Hmm.
policy making and dominated the mindset of those who were the beneficiaries of that particular.
But I just want to okay, so let us try to step into these people's roles. Like you said, this strategy had worked in the previous decade, from what you say 2002 to 2003 to till about the eruption of the global financial crisis in 07, 08. So it was working then. If there are rational people there, like it's worked then, it must work now. So why did it specifically work in that small period, and it has kind of, like you said, run its course in the current decade?
So if one goes back to the previous decade,
Yeah.
after the 1991 reforms,
Yep.
so the 91 reforms, insofar as it meant sudden opening up of various opportunities for the private sector and all
Yep.
that, initially again spurred a kind of in boom in private investment,
Yeah.
corporate investment in particular.
Hmm.
But if you look at the period from say 97 onwards, which coincides with the East Asian
True.
crisis,
Yeah.
you had a slowdown in India and that investment boom collapsed. Okay, and so for
Okay.
the next 5 to 6 years, it was in that, so that this condition that you're seeing today showed its effect in producing that cyclical downturn earlier.
Hmm.
In the early part of this decade, of this century, what you had was a global process.
Hmm.
There was a global boom.
True.
Uh, it was not an India specific boom, though, of course, India participated majorly in it.
Hmm.
But it was a global boom, which was, in a sense, the conditions for which were created by the East Asian crisis and the effects of that for a period of time. So that global boom had some characteristics, which is that the developing countries in the world,
Hmm.
okay, they led that boom in the sense that their growth rates were not only faster,
Hmm.
the gap between them and the advanced economies increased.
Hmm.
Of course, in explaining that entire process, the role of the United States was extremely important, and credit
Yeah.
financed expansion of demand in the US was the kind of engine of that particular process.
Yeah.
But in terms of growth, what you got was that developing countries were growing faster. Not only that, you had what in that period what came to be called the paradox of capital flows,
Okay.
which is that supposedly capital poor developing countries were exporting capital to the capital rich advanced economies. And the faster growing economies were exporting capital to the slower growing economies. So this is something that standard theory tells you, mainstream economic theory tells you shouldn't be happening.
Okay.
But that was the process that was happening. So it was a period in which the world economy boomed. Global capital flows were also booming. Okay, these had effects on the Indian economy, where on the one hand you had, if you go back to that particular period, the first items which kind of expenditure which start going up are exports. So even if India was not very competitive, globally the boom was such that it created an expanding demand for products which traditionally India did not export very significant. But those industries started expanding their exports, chemical industries, engineering
Yeah.
industries. It also had an effect on India's IT exports. Okay. So there was a stimulating effect that came from that particular process, which contributed to inducing investment in it. The other side of that process was capital flows into India. Large amount of capital flows into Indian stock markets, in particular into financial markets, which produced a stock market boom. Those speculative tendencies then spilled over into other sectors of the economy. You already had something of like a construction boom in that was already taking place. That got fueled even further by this particular process. Those flows also led to a fairly rapid explosion of bank credit in India. So a lot of credit financed expenditure happened, and a lot of credit financed private investment in bank credit finance, private investment in infrastructure, which was encouraged by the government, also happened. A lot of which eventually turned up in the form
Bad
of the
loans. Yeah.
NPS,
Yeah.
bad loans in the. So this and the central element in that was that this managed to induce very rapid growth of corporate investment. Okay. So for a period of time, the conditions were such that animal spirits were high, investments by the corporate sector were extremely high. So about half the additional demand that was being created in the Indian economy in that period was coming from investment.
Investment.
So
Not
whether it's
from
real estate,
consumption as a
infrastructure, manufacturing, yeah, not from consumption but from
investment.
investment.
Okay.
So India's investment ratio, the proportion of GDP which is spent on investment, rose dramatically during this period. Okay, a kind of rise you had never seen. In 5 years, you went from by about 9 percentage points. It went up. Okay, corporate profits also boomed in that particular process. But all such investment ultimately had to pay. And what you saw actually in that period was also one of the periods in which perhaps the greatest increase in inequality in India took place. Because wages were stagnant through that boom. All the data will show you that any increase in wages that have happened then happened 2008, after 2008, and of course it's not been very significant since then. And that growth has also slowed down. But the period of the boom was a period of wage stagnation. Okay, and so that meant that this disconnect between the expectations that were driving investment and the realities of what was happening as far as the Indian market is concerned, that was increasing. With the global crisis, that problem surfaced. So on the one hand, the export boom
That
no
was closed.
longer
Yeah.
sustained, and it never recovered from that. The domestic market constraints also became more severe. But during that period of boom, there was something else which was also at work, which ceased to work, particularly from the beginning of this decade, which was that not because tax rates increased, but simply because the boom in corporate profits, particularly, and the rise in incomes of the top income categories in India, the tax to GDP ratio for a period of time in India increased. So it allowed for a period of time the governments to do this wonderful combination that they could step up some bit of public expenditure and at the same time satisfy financial markets by reducing the fiscal deficit.
Okay.
So basically, expenditure also grew rapidly, but expenditure to GDP ratio never was allowed to go to a point at which the increase in tax to GDP ratio would allow. So actually, the fiscal deficit came down during that particular period. But with the crisis and the move to fiscal stimulus, as everyone else in the world did, you cut taxes and you did a little bit of stepping up of expenditure. With that, the deficit increased. And in a few years' time, like everywhere else in the world, there was panic that public debt is increasing, fiscal deficits are increasing because of stimulus, austerity is required. You had the same process in India, and from 2011-12, we use the term fiscal consolidation. So from 2011-12 till the end of this decade, up till now, the effort has been directed towards reducing the fiscal deficit. In that effort, the bulk of the responsibility for reducing the fiscal deficit has been placed on the public expenditure side because the taxes have not recovered. Okay, India's tax GDP ratio has not crossed the 2007-8 level since in this. Okay, so taxes have not been recovered, and the pressure to give tax reliefs because of the slowing down of the economy has increased. Okay, so it's the expenditure side which has borne that burden. So instead of using your taxation and expenditure policies to redress some of the inequalities that the working of the economic system was generating, and to expand demand by stepping up public expenditure, you had government economic policy reinforcing the problem of demand and the inequalities that this was generating. And as the economy started slowing down, GDP growth itself started slowing down. The revenue side started getting affected by the slowing down, and therefore the pressure to bring down the expenditures has increased. And now we are in this situation where revenues are down, expenditures are down, and yet the fiscal deficit is way above what they think is the appropriate target. So the dominant mindset of that thinking has aggravated this problem, and this has got to do with the fact that okay, that boom was there. Once the crisis comes, if you go and tell those who benefited from cheap labor that now that the crisis is there, let us do something to increase the returns to labor. So their reaction would normally be that, look, I am now having a problem of profits. They don't understand the relationship between the employment and income crisis of those who labor and their profit crisis. They think that income, reducing those wages or the burden of wage costs will help improve the profitability. Okay. If you tell them you should pay more taxes so that public expenditure can be brought up, they would say, please do the opposite. Cut my taxes because my profitability of my investments is already down, increase it by reducing my tax burden. Okay. And government should not be expanding expenditure. We have a problem that we can't find opportunities for investment. So government should open up more sectors for investment to us instead of occupying them by spending itself. Okay. So that is the way in which they tend to look at it, and they want to go back to that golden age. Okay. But their position within the structure, their class interest makes them look at it this way. And because their understanding continues to dominate state policy, you are having a situation where you have a decade-long period of evidence of trying to two different governments trying to encourage private investment, trying to follow fiscal consolidation. Okay, everything you've done, trying to encourage exports. Okay, the one thing you've not done is stepping up public expenditure. The rest you've all done. Okay, uh, everything has been attempted with no results for 10 years, and the situation becoming worse. So it takes a certain mindset to be unable to recognize this evidence. And that mindset comes from the fact that those who benefited in the previous decade, uh, for them, recreating those conditions is more important than changing the conditions which produce the crisis.